When a renovation comes across your desk, you should immediately think about the Tangible Property Regulations, otherwise known as TPR. Many are familiar with expensing under safe harbors, but aren't fully leveraging the rest of the legislation. Keep this in mind to really make the most of the TPRs. A quality cost segregation study is crucial. Let's explore 3 critical TPR questions every property owner should consider. Number 1, can I expense under a safe harbor? The de minimis and routine maintenance safe harbors are powerful incentives. If you can provide invoices or an itemized ledger, your cost segregation team can produce an expensing table with justifications for each asset. Number 2, can I expense using bar/materiality tests? Too often, assets are capitalized when they could really be expensed. By using methods of testing each improvement against the bar and materiality test, you can determine if any asset has been miscategorized and write them off instead of keeping them on the books. Number 3, if I must capitalize, can I take advantage of partial asset dispositions, better known as pad elections? If an asset must be capitalized, the TPRs allow for the immediate write-off of the remaining depreciable basis of an asset that was replaced or removed from service. Your cost seg team can prepare disposition tables that justify the election. It is important to note that a pad election must be taken in the year in which the asset was removed and cannot be done retroactively. Missing out on pad elections is the single biggest mistake professionals make when it comes to TPRs. When a client is doing renovations, be sure to consider TPRs. Get clarity on project scope and timing. Find out if itemized invoices are available and consult with your EisnerAmper Cost Segregation Team as needed.